But if you have these two stories at the same time, rising prices and bad growth, stagflation, the initial reaction to gold price is probably going to be down because people are going to say, oh, the Fed's not going to cut rates initially. But if stagflation is the environment we're settling into, gold, in my view, in that environment could go much, much, much higher, right? So I'm not saying that's what I think is going to happen. Please understand, I'm not saying, oh, gold is going to scream to 3,000 in the next 2 weeks. I'm not saying that. But what I am saying is that if this is what we get pictures of today, if this is the snapshot that we get, inflation spikes at the same time growth is cooling, that would be the unexpected scenario. But if it happens, I will definitely be looking personally, not telling you what to do, you do your own thing, but I would look for pullbacks to actually get long, because that would be a very bullish environment in my view for gold if you get an inflation spike today. Now, why would gold move down first? Well, it's because if inflation moves up, then interest rates, they're going to be projected to not come in as quickly. In the short run, the market may respond, oh, that's bearish for gold, because interest rates, coming down are usually good for gold because it's weak for the dollar, strong for gold. You get the point. So in the short run, you might get a spike to the downside if you get high inflation today. I know it's a little counterintuitive at first, but just trust me. That's the idea. It would probably move lower. And then in my view, that would be a possible buy the dip. What if you get really cool inflation data and the market rips through the highs? Then I'm also bullish on gold. What you'll notice here is that there's no scenario today where I'm actually bearish on gold. That being said, I'm watching price action here to see what we get at these levels. If you are somebody watching gold with me too, what I'm looking for is either a strong break, closure, and pullback, or I'm looking for a deeper retracement, at which case I could potentially look to pick up gold at a better price. I think you have elevated risks due to geopolitics. I think you have interest rate cuts coming, the uncertainty surrounding the election, and the side dose of possible stagflation worries. Now, Nick, how can you possibly be bullish on gold and also be bullish on stocks? Well, I'll tell you what, guys, if we get something today, I'm bullish on stocks in the instance that inflation comes in cool. But if you get inflation coming in ugly today, I will probably be moving out of some of my stock positions. As a stock market bull right now, I'm looking at the NASDAQ, I'm looking at the S&P 500, but I'll tell you what, if you give me today, if you say, Nick, we got really ugly inflation numbers coming back up, I would not be surprised if the S&P 500 is taking out the lows in the following weeks. Inflation today is very important because it is a check mark for the bulls or an absolute devastation to the recent rally. Because if you get inflation coming back in, suddenly things are just going to look ugly. Because then you've got, growth concerns, but now you've got inflation not going away. Not fun.
This week only, we're doing 30% off our VIP Discord service. Inside the VIP Discord, you get access to real-time trade signals from Trader Nick, Frank, and Ivan, with complete trade details including analysis on the reasoning behind the trades, their entries, exits, and stop losses. Our traders cover a wide variety of assets including gold, oil, and other commodities, Forex trades, option trades, and even stocks too. We have active chat rooms filled with traders from all over the world discussing their trade ideas as well. Plus, you get access to our exclusive strategy guides and VIP webinars for joining. All of this incredible trading content is available right now for 30% off, and it's a one-time purchase. So grab it now on sale using the promo code down below before it's too late.
We're going to be taking a look at all the different charts at the same time here. We've got S&P 500, NASDAQ, US 30, that's the Dow Jones, dollar index right here, euro, the pound, gold is right here, WTI is right here. So we'll keep an eye on all of these charts so that we can get a broad reaction to this. And we got about 1 minute to go here before we get the PPI number. Let's see what it does here to markets today. Should be very interesting. Again, could be a wild day, could be just a check mark day. We'll see. If Check mark as in inflation not being a problem is probably just, okay, markets stay the course. But if inflation is a problem, get ready, right? And again, we could see highly volatile moments. Please be very careful. I know a lot of traders will gamble on these sorts of events thinking that they're slick with it. Trust me, the market is more slick than we think. It always is. Be careful. Don't over leverage. Don't be dumb. We got about 30 seconds to go here. I'll give you the breakdown after. Don't leave after the spike, by the way. A lot of times we see people, come in right before the spike, views go up, and then as soon as the spike happens, everybody's like, peace out. See you next time. But stick around with us. I promise. It is worth sticking around. Got some good content. Okay, breaking news coming in. All right, and let's see what we got for the PPI number. An initial move higher for stocks, euro, gold. That would suggest that inflation is not an issue. Lower than expected. Ooh-wee, guys. Look at this. We got 2.4%. That is not threatening at all. The producer price index year over year came in at 2.2%. They revised the previous one up a little bit. The current one came in low. Okay. I would say overall, this is not a threatening figure, at least from what I can see so far. Yeah, I would give you my first reaction here. They revised some. I'd give this a B+. That's the report card. Let's go take a look at the market's reaction to a B+. S&P 500, NASDAQ, Euro up, dollars down on this news. Again, inflation does seem to continue to be cooling. This is good news. Don't get it twisted. This is definitely a positive report for stocks. I imagine you're probably seeing a little bit of bullishness in Bitcoin. Let's see. A little bit for the Bitcoin bulls out there. NASDAQ's up 0.9%. The Russell loves this. Amazing to see that. I am long the Russell. So keep going, baby. Do it. You can do it. The Russell, small to mid cap companies in the United States, definitely more sensitive to interest rates. Their revenues are a little bit more consistent, but they are more sensitive to borrowing costs. They have, they're growing, but they need low interest rates. Let's take a look at interest rates, by the way. I imagine they are probably down here today, and that's what we see. The 2-year yield is down 1%. The 10-year yield, this is signaling that interest rate cuts probably on the way. Inflation doing okay. This is good news. This is what the market needed today. Okay, so if you listen to my commentary the last few days, what I've discussed about the NASDAQ is that this recent move could be completely killed by bad inflation statistics. And if you listen to Chris and I's conversation yesterday on the live stream, this is what we saw, or this is what we mentioned. We mentioned that a good inflation figure is just kind of a check mark. It's not going to make the market like scream higher. That's what I was pointing out yesterday. But a bad inflation number would have completely been awful, right? So the market is shaky here, but likes this number here. At least this is satisfactory to the market. Recent rip. You wanted to talk about the Swiss franc. You want to talk about the Japanese yen, and I imagine also the dollar. What are your thoughts on those things?
I just want to mention to you guys, like, oh, what about dollar Swiss? What about everything? Like, sorry, is that for all the Swiss pairs did the same thing as the yen pairs and the dollar pairs, kind of, was that we had this meltdown. Okay, we are going to have many meltdowns going forward. So my thoughts is when you have this meltdown, you have this. I don't know what the Swiss did. It was 700 pips on Australian dollar against the Swissy. Mm-hmm. When you have these meltdowns, there is going to be a rebound, and you have to be prepared for those, because those are one of those things that I really love. So yeah, I did a couple of trades on the yen pairs, as you can see, when it, in my opinion, turns bullish, and now it's going to be sideways. But when you have these volatility events, whatever it's called different things, different days, but they all have a rebound at the end of it.
Yeah, and the bounce can be so violent, right? Like everybody was so convinced that the Japanese yen was going to go to 1 million and the stock market was going to go to zero. And to your point, look at the bounce backs in things like the Nasdaq. You take a look at the Japanese yen. My goodness, this move from the low to where we currently are is 550 pips. It doesn't even look like that much. Just to show how violent that move actually is.
So as requested, we are on dollar Swissy. We are 222 pips up from the bottom, and then you need to decide. Now you have it. This is testing ground, right? So at what point, or is it still not? At what point is it bullish for you? And then you have to go back into all these other times where we have done this type of situation, because what is it called? Preparedness meets opportunity, because nothing really happened to Swissy. Swissy wasn't a part of this game, generally speaking. Well, in the end, it was proven by the COT report that there was a lot of movements away from the carry trade with the Swissy, but the Swiss National Bank, the Swiss economy didn't do anything. So we need to keep this in our heads.
Yeah, and that's the thing is when you take a look at both the Swiss franc and the Japanese yen, saw a lot of buying of their currencies because the world kind of entered this pandemonium, terrified of global recession. But that's not usually how it works, Ivan, right? Like a recession doesn't jump on you. It usually materializes over time, right? So like this idea that we have one bad jobs number and the world's going to go right into a recession the following week is not very realistic. I mean, if you take a look at, for example, the signs in 2008 of a recession, many people, obviously hindsight is 2020, but many people were pointing out that the recession really only got seriously announced once we had really seen the bulk of the stock market sell off. So if you're someone who thinks, we're going into a massive recession, well, you could kind of be like on a roadmap, you are here, right? You are here, right? So to say like, we are in a great recession right now, like it takes time. Even if you're right about a recession call is a gradual process, not a snap call based on one jobs data point. I do think that it's fair from the NFP report. If you're looking at something like dollar yen or euro yen, the demand for yen coming back is kind of fair in a perspective of, well, there's a higher chance or probability of a possible recession. So I get that, but I think that in the short run, it became very overdone. And where do you think this has room to go to? Ivan, do you think we're sitting right here on dollar yen at 147? I think if we get a closure somewhere in these wicks, that it's very possible that we see a little bit more upside and that maybe this dollar yen normalizes a little bit further.
Yeah, so about where this one is going to go is, of course, highly dependent on what Bank of Japan does and wants to do in the future. If they want to do a rate hike again anytime soon, which is very unlikely, but hey, that's the name of the game. Yep. And as well, when we're saying trading Forex is risky, this is the risky part. Where things just drop out of your hands and you're like wondering what is going on with my account. I'm losing. That's where you have your stop loss, right? So it did, Kyle did drop 2,000 pips, and in my simple opinion, and when I've been trading this kind of scenarios a couple of times now, that we are going to go higher eventually. It's going to reduce what generally tends to happen is that the volatility reduces. It starts going a bit of range bound, and then it kind of like it trickles a bit higher, because what is technically or more flow wise currently happening is that a lot of buyers on dollar yen left the building, but they also got a ridiculous discount.
Yeah.
We're seeing that dollar is now maybe going to have a rate cut, and we may have a rate hike in Japan, but that's not current.
Yeah.
We still have quite high interest rate in America. We still get money from doing the carry trade at a serious discount.
Yes, there's still some. Actually, Ivan, you breaking that down made me think of something. So I want to discuss dollar yen here. The chart that you just drew in, that little squiggle there, I actually think is probably the most likely scenario for price action going forward on dollar yen because of the actual situation that took place here. If you think about what happened for dollar yen to make that kind of move, there was a big deleveraging event. So many hedge funds, they borrowed the Japanese yen to go buy bonds, to go buy stocks, to go buy higher yielding assets. It is one of the oldest trades in the FX book, right? That's what all the big players do. They go sell the yen or borrow currencies so that they can go and then buy higher yielding things and make a return for their bank, for their clients, whatever. Now, the thing here is, as you just mentioned, some of those investors, those hedge funds, those banks still have unwinding to do, deleveraging to do. If the risk of a recession is higher, many of them are going to have policies that they're going to want to reduce risk. So that would cause some downward pressure. But if that happens at a steady rate, not a crisis rate like we saw, then that can occur at the same time that, as you just mentioned, a lot of savvy investors, a lot of traders can see that there is value here, that there's underpricing of this exchange rate potentially. And what that could lead to is, offsetting of some of the carry trade for some, which will put down pressure, but a lot of buying of the opportunity. So that could lead to some selling, slightly more buying, and maybe a slight trickle up, as you're saying. So I actually think I could be, wrong, and something could change in the picture. I don't think the Japanese, central bank is going to surprise hike rates. They've said such in their, recent outing during all the chaos last week. They felt the need to step in and stop the bleeding on the Japanese stock market, on the yen. So I think that the most likely scenario, not a certainty, but a likely scenario, is that we do see a trickle higher on the Japanese, on the dollar against the Japanese yen.
I'm going to chicken out. And I'm going to say we are kind of in the middle. We are at support. We are kind of in the middle. We are not in an extreme enough to say, well, this should be the bottom and therefore we should go in a certain direction. But I just want to make this chart very simple for everyone, right? That's kind of how I would do support and resistance on this one. I say, okay, we have hit it. Can it break? Absolutely. It's just what has happened so far. So then you have to look at drivers. What drivers do we have today? We have PPI that was a bit lower than expected, and the previous one was revised a bit higher, so the drop was a bit higher. Okay, and then in that fashion, if CPI comes out tomorrow, then that should continue lower, based upon the current drivers, and that's how I determine where things should go forward, not necessarily technically what candlesticks it's giving me.
Yeah. No, that makes sense. I think from a perspective of what you and I have done for the last number of years, we pay most attention to the fundamentals first, and then we try and lay the technicals over it. And I think that, a lot of traders, they only focus on the technicals, or they do a dash of fundamentals after they get done with the technicals. But for me, the fundamentals come first. Right now, that, as you just mentioned, the word drivers, I like that word for this. The drivers for the dollar are lower. We've seen growth slowing in the US. There's no question in that, because again, we saw the jobs data, which spooked the whole market. I'm not saying it's crashing, but it's definitely slowing data out of the US. And at the same time, interest rates are expected to come pretty soon, because in September, because we also have inflation really cooling today. Today's inflation figure, I think, was very much, if you were a bull on the dollar today, you're looking for just a winner chicken dinner, higher than expected inflation stat today and tomorrow. But we didn't quite get that today. We'll see what happens tomorrow. It could, reverse course tomorrow. But what that would tell me is most likely the path of least resistance is for us to, test this 102.5. And if you get cool retail sales or CPI data, I would not be surprised if we take out the lows and continue the selling on the dollar, leading to, other currencies to take a bigger move to the upside. I'm also watching the euro. What do you think about the euro, Ivan? I like it on the long side if you get a big breakout on some soft data points out of the US this week.
I don't know if I'm confused, but so how do I tell myself how to think about it? So in general course do is kind of like opposite of what dollar would do. So if dollar is weakening, we are seeing quite a lot of risk on. Europe isn't in my mind doing awfully horrible. And then there is GDP tomorrow for that matter. But I would be like a standard bull on a euro, not for any price and not at this price, but yeah, I think that generally we would see higher price on euro based upon what the dollar is doing, and generally it's not horrible in Europe. We are seeing inflation stabling around 2.8, 2.9 or so. So it's all right. It's probably due to go a bit higher because of risk on sentiment, because we haven't seen the retaliation from Iran on Israel.
Yeah, and Ivan, let's just throw that around for a second too. If you get something that comes out more scary on that front, what's your playbook for that? I know you and I have talked about that before. Oil's moving up already. It's kind of hard to be in some of those moves before they potentially happen. But what's your playbook if you get geopolitical stuff kind of ramp up suddenly?
I hate to say it, but I bought not all the NPairs. I bought the NPairs that I posted in the group. So I will be seriously hurt if that happens. So don't jinx it. But euro, pound, New Zealand, Australian will fall against the dollar and the yen and the Swiss. It will be a reverse of what is currently happening. So yeah, oil will probably go higher, but like the winner winning chicken dinner is probably a Aussie dollar or Aussie dollar yen kind of short is probably the best one. But you don't know until it happens, then you already way too late and it already happened. Sorry.
That is probably what and the playbook on that, which is kind of weird, is in my view would be if you get big moves lower on the dollar yen or you get stock market sell off in that regard, it actually might be a buying opportunity if the rest of the economic data looks okay. It's kind of weird how that works. Paul, thank you very much for the $4.99, man. I like to use technicals. Normally the chart tells me what to do next, but there are times fundamental comes to play. I would agree, Paul, especially in a week like this where you have just, data is going to drive the markets. What you'll notice is that on no economic days, economic data days, the market's not moving. And then once the actual data comes in and creates a real driver or a bias, suddenly the charts are moving one direction real hard. So, today's PPI statistic is a good example of that. You take a look at the NASDAQ, which is just, here's the 5-minute chart. There is movement here. The gold market is moving higher or continuing its move higher. It's been flying overall. So definitely true. Thank you again for the $4.99 donation. I appreciate it very much. Ivan, what else are you watching? Any other charts or pairs you're watching?
Across from the Australian dollar, Australian dollar yen, the euro yen, the New Zealand yen, no.
So you're really just focusing on the yen pairs right now, and you have a pretty bullish bias on the ones that you've got.
Yeah.
Which one's your favorite? Which of the currencies against the yen is your favorite?
The one that gives me the most pips for the least amount of risk. So at this point, it's probably euro yen.
Okay, euro yen. Yeah, I typically like I like the euro on the long side right now as well, unless something changes. But very, very interesting. Okay, I'm going to ask you another one. Gold. Okay. I was kind of thinking today with gold that the inflation statistic may not have mattered, and gold would stay bullish in either case. This is my long story short reasoning for that was inflation high is meaning, they might not cut rates as quickly, but high inflation, commodity prices rise, stagflation potentially with growth concerns. That would have been potentially still bullish. And then we know why, low inflation is still okay for gold because they're going to cut interest rates. Do you agree with that? Or do you think gold is, bumping heads with the highs and it's going to come lower? What do you think?
I want to arrest you today. Look at the calendar for tomorrow. What's on the calendar tomorrow? And what have we learned from the markets? not ourselves, but what does the market taught us about tomorrow? When we have two inflation data 2 days in a row, the first day is muted, and then the market comes in tomorrow. Because on my calendar, at least, it is ZPI, and that's where it's gonna go. So today it seems a bit muted. So, but yeah, and in general, I agree with you. I'm just having fun with you. But yeah, if this one comes in lower tomorrow at 2.8 or lower, gold, is probably gonna take off. Dollar is gonna fall, as we have talked about, and that's gonna ignite the rate cut situation. But if this one comes in like 3.1 or higher tomorrow, I'll be confused.
Yeah. I think it's possible that, based on today's PPI number coming in, we could see a 3% forecast come in line, or maybe even we drop the 3 handle, we go into the 2s, and maybe that is a signal of a sigh of relief for the markets. Again, a lot of people really concerned that we've seen unemployment rate rising. And you couple that with rising inflation, that would be horrible. But today's data point already gave us at least one check mark of this week. We got to get through this week. This week has so many different variables. The big ones that I see, Ivan, that I'm still watching. So we've got PPI out of the way. The other things that I'm watching for this week, so we can take that one out. We have CPI, we have retail sales, and we have another wild card, which is WMT, Walmart earnings after the bell on Thursday. Why? Because retail sales and Walmart both give us insight on the consumer, right? So Walmart is obviously, everyone knows Walmart, massive shopping center, tons of retail trading volume or purchasing and buying and selling goes through, Walmart. So if the demand from the consumer is there and is okay, that's going to be a good signal for the consumer. And if it's weak, if they miss earnings or they miss guidance, or they guide that their earnings are going to be poor for the rest of the year, they have a lot of that data at their fingertips as a company in the goods and services world. So very interesting stuff to see retail sales data this week. The Walmart earnings, both of those will be very interesting. Probably the biggest market mover for the rest of the week will be CPI, but retail sales will also be very, very important. So we've gotten through one of them, Ivan, but we got more to come.
Oh, it's going to be funny. It's going to be interesting. It's going to be great. It's going to be a fantastic to be a trader going in these days.
Yeah, and then you've got late August, I believe we have the Jackson Hole Symposium with the Fed, and we have NVDA earnings, which are always a wild card.
Well, how much can they beat the beatings? Like, how much can they beat the projections?
That's the question, man.
How high can the high go?
Every time they've had their earnings, they come out and or not every time, but most times they come out and they beat their earnings and they guide even more than people thought they would. So the question this time around, August 28th, is, are they going to pull off another stunt where the market, rips on NVIDIA earnings again? Or, are they going to come short, which has the potential by itself to erase a lot of bullishness in the AI trade? So that event, as well as, I think NVIDIA earnings, if you're a stock index trader, Jackson Hole Symposium with the Fed probably carries the same weight as NVIDIA earnings. They're both very, very important to what happens next in the indices.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.